Welcome to the Ag Commodity Corner. It's April 4th. My name is Noah Agostino, and we have Avinash Global. And it was a wild week in the markets. We had mostly, it was largely because of the U.S. tariffs and China retaliating. So we're going to talk about that in this podcast. So, as a quick summary, you can see from the chart now, this was done before the markets closed in the stock indices. So, I think the Dow was slightly closing a little bit higher than where it was, but you can see how bad the stock indices did. We'll talk about that. See, crude was down over $7. And gold's a surprise because gold was the safe haven asset, and yet this week it was falling apart. And if you notice Bitcoin, it was actually up today. So it almost looks like Bitcoin's acting as that safe haven, which is really weird in this environment.
Well, to start with, Mo, there's no other place other than the U.S. reciprocal tariffs, and as of now, everything is at risk if we go into a global recession. On April the 2nd, President Trump announced aggressive elevated tariffs on nearly all U.S. trading partners, including an introduction of a 10% baseline tax on imports from all countries. It affects about 185 nations. The most notable tariffs were a 20% levy on the EU and an increase on China to 54%. Set to take effect on April the 9th, these tariffs will raise U.S. trade barriers to levels not seen since the 1930s.
So China retaliated, but it's not a big concern when it comes to corn simply because they haven't been a big buyer. They haven't been a big buyer since the Phase 1 trade deal in 2021, but the second biggest buyer, and frankly, Mexico and Canada won this week because they didn't get any reciprocal tariffs. But Japan is retaliating, and they're the number two biggest buyer. And so there's still some fundamental risk with that corn export program. We haven't seen the pace come off, still at 24% versus last week. But do we start to get any cancellations? However, regardless of tariffs, if the market is so worried and fearful about a global recession, beef and livestock, despite the tight fundamentals, despite lower supply, in a global recession, when we've seen past recessions, demand falls off the cliff. Demand is destroyed. So that's why cattle and pork were down hard today.
Following from the U.S. tariff announcement, today we had China retaliate. So China will impose a 34% tariff on all goods imported from the U.S. starting from April the 10th. This, along with other trade barriers, and on top of prior trade barriers as well, meat exports are in jeopardy. So China and Japan account for about 38% of total U.S. beef exports and about 22% for pork. More.
Yeah, so soybeans are the big loser this week. China and the EU are the two top buyers of soybeans. China represents a total of 20% of all U.S. exports, and the fact that they're retaliating 34% on all ag imports. We did some damage on the charts as of a Friday weekly close. If we close below 973, both in the old and new crop, you're going to retest that. You're within spitting distance of the lows from December at 953, and this reminds me of 2018 all over again. And we've been worried about this since July 15th of last year with our clients, and we have a lot of our clients protected. And you can see here in this chart with pork, again, as I said earlier with beef, China buys about 1 in 5 pigs. So this is a big concern. Again, Mexico purchases about 40%, but they won this year without those reciprocal tariffs, and they haven't retaliated. So to some degree, the pork is protected, but the market's still worried about that global recession and the fact that demand could get destroyed.
Let's talk 45Z, Mo, and we touched upon this during the past week. We haven't heard anything yet in terms of a plan or a policy, but even if initiated now, it could take up to 9 months to a year before we get a green light by the U.S. Treasury Department or the Congress.
You can see from this chart with my little pointer that we had a huge week this past week, but it's starting to fall off the cliff because of this concern, this retaliation, these U.S. reciprocal tariffs. So it helped the beans a week ago, propel it higher, even canola. But in this environment, if you got to wait another 9 months to a year because you haven't gotten the green light from the U.S. Treasury Department or Congress, and until you do that, they got to go through a bunch of different steps to get there. I think this is the ceiling, this 48 to 50. So, as I said earlier, we've been protecting our clients. Feel free to sign up for an 8-week free trial. We have an app. Most of our competition does not have that app. We launched it in 2018. Farmers can watch the markets, 10 minutes delayed, bar charts, but you can also put in some price targets. So if you are hoping that maybe corn goes back to $4.90 by July 1st, you can plug that in, and then if the price hits that price, if the markets hit that price, the app will send you a notification that, hey, maybe it's time to do some marketing. So feel free to do that.
Also, Mo, last week we had the USDA March Planting Intentions reported as of March 31st. So the report was judged to be mostly neutral. U.S. corn acres were above the average trade estimate at 95.33, while U.S. soybeans at 83.49 and wheat at 45.35 both came in below trade expectations. And there were no surprises, corn or soybean surprises in the March grain stocks report, which came in near trade expectations. Wheat stocks came in higher than expected.
Yeah, so the market probably was relieved that we weren't planting 96 million. That was kind of the whisper number. We spoke about it last week in our weekly podcast. But 95.3, if you include a trendline yield of 181, and by the way, a lot of the states that increased corn this year are able to achieve a 181. So when someone says, well, we added too many acres in the fringe states, we can't achieve that, I disagree. You put 181, you don't make any changes in demand, and ending stocks start to go up in corn. 2 to 2.3 versus 1.54 today. Soybeans, it depends on what happens with demand, but you just heard us talk about how China's retaliating last time. Soybean exports fell as much as 200 to 385 million bushels. You take that just demand destruction, add it to ending stocks at 380 today, and you've got higher ending stocks and lower prices.
Let's talk crude oil more. So 8 OPEC plus nations plan on increasing crude oil production. So Saudi Arabia, Russia, Iraq, UAE, Kuwait, Kazakhstan, Algeria, and Oman decided to raise collective output by 411,000 barrels per day starting in May. The expectation was for just under 140,000 barrels, so that's a steep increase. This month, they started gradually unwinding 2.2 million barrels per day of voluntary cuts, which were in place from the last 2 years.
One of the reasons we add value for our clients is right here, this crude oil, this diesel fuel. We've been spot on for the last 5 straight years. Sign up to our program and you'll understand why. We'll tell you what to do with crude oil, where it's going, what you need to do ahead of planting season. This thing is 90 degrees to the bottom here. So crude is broken to long-term channel support at 65. And the next level is down into that 52. I think that's possible going into next week.
The stock markets are falling hard on inflation and recession fears. Today, the Dow Index pulled back about 2,000 points. S&P sank about 5%, having its worst week since 2020. And NASDAQ dropped around 5% again. This was on top of yesterday's 2.5 trillion US dollars of combined wipeout.
You can see from the chart that there's a channel that I've drawn. The red lines are your channel. This is 2020, March, COVID 2020. The Dow fell 38.8% in 5 trading days. This is sort of similar. I think this is just the beginning of what we saw in 2020. I call this a black swan event, similar to COVID. If you're going to fall an equivalent amount, you could see the Dow back to 30,000, which would take you down to this level here. So I don't think we're done. I think you could see a 20-30% correction. And until then, don't panic sell, but make sure you have some cash on the side that you can take advantage of this. Because in March of 2020, again, if our clients listen to us, we've made them a ton of money. We said double up, triple up. It's a huge buying opportunity. It's a buying opportunity in your lifetime, and you'd be up 150% despite this little correction here shortly, most recently.
Let's talk weather more. So US weather is less than ideal for planning, early planning. Strong to severe thunderstorms and heavy rain is forecasted for the Midwest near term. Some parts will see flooding, some low-lying wheat area will be affected as well, but it's early, some replanting will happen. The first USDA crop progress report is scheduled to be released on Monday.
Yeah, unfortunately, it's some weird weather that for this time of the year. That very southern Missouri, Illinois, Indiana, Ohio River Valley, it's a drought buster. But unfortunately, there's just too much moisture. Some of those southern areas have started planting, particularly on beans. And when you get a foot of rain, you're going to have to replant those acres. So it's not ideal. It's too early. If we continue with this moisture into next week, then it becomes a problem for the market.
The CFTC report, the chart we have is from last week. It'll be released a little later today, but the funds are short ag now with this week's news due to US tariffs and China retaliating.
Corn has held up better than most. You can see from this chart that the funds were long 74,000 and change. After this week's report, they're probably still slightly long, but overall short the ag commodity markets. I'm assuming after today, the funds have taken some length off of livestock as well. So,
sticking with planting intentions, similar to the US, Ontario plans on planting more corn acres versus soybeans in a Farms.com risk management survey, which was done from Jan the 7th to March 14th of this year.
Yeah, so we did a survey, and not surprised that the acres are hard. We're subtracting some bean acres to corn. We've added some wheat acres compared to last year. Farmers are complaining about those inputs, those high corn inputs. Planting will determine whether those acres get planted. If you get a wet early start, then we may end up putting in some more soybean acres. Farmers are a little bit perturbed about the premiums on those IPs, down 50 cents. I don't understand that, but still some good premiums there. But overall, looks like, and up here in Ontario, we had a record crop again last year, 204. So that I think is playing into higher corn acres as well.